Before we go into charting platforms, I need to show you a few charting elements that we are going to use in this course for this strategy. So I'm going to show you only the elements that we are going to use for this strategy. And those elements are used to show the price. So price can be shown in the form of a line, as we are going to see that goes up and down. But it can also be shown in the form of other elements like candlesticks or bars. In here we have candlesticks, or also Japanese candlesticks. So instead of using a line that goes up and down, if you have a chart with candlesticks, it will show one of those candlesticks for each day of trading or for each time frame. And I'm going to show you when we get to the chart. I'm also going to show you time frames, because you can trade. We are going to trade the daily time frame only on this strategy. But you can also use other time frames. So if you go intraday, so every candlestick will mean 1 hour or 4 hours or so on. That's intraday trading, so that's different from other type of trading. And the main chart, it's usually the daily chart, where each candlestick represents 1 day. And there are two types of candlesticks that we have here on the screen. Here we have a bullish candlestick, and here we have a bearish candlestick. So if you don't know what bullish and bearish means that it's a price or an asset that it's poised to go up, and bearish means a trade or an asset that it's poised to go down. Also long again means up, short means down, or shorting means down. So long it's equivalent with bullish, short it's equivalent with bearish. It's called bullish because the bull, he attacks from down up with his head, and the bear attacks with his hands from up to down. So that's why they call it bullish and bearish, and that's why you have a bull on Wall Street. So a bullish candlestick, first let me show you what are those elements of Japanese candlesticks. So it's called like that because they look like candlesticks, as you can see. And candlestick, they have a body which is delimited by this line where the color, its color sits inside, and they are usually used like that, but you can change the colors whatever you want them to be. So you have a body, and then you have 2 wicks. You have the wick above and the wick below, and they can have different shapes: big body, small body, long wicks, as you are going to see on the charts. And the wick high, this means the maximum price that has been achieved in that time frame, and the low is the minimum price that has been achieved in that time frame. So if we are talking about a daily time frame, so if the candlestick is 1 day, this is going to be the high of the day, the highest price of the day, and this is going to be the lowest price of the day. This corner of the candlestick is going to be the open price for the day, so it's going to be in this corner, and the diagonally opposite corner going up is going to be the close. And in fact, what makes this a bullish candlestick is that it has the close price above the open price. So a bullish candlestick will open down and it will close up. So this means it has opened at a certain price. Maybe it went a little lower in that day, but then it went up, it made a high, and then went a little lower and then closed. So this means that for this time frame or for that day, this asset went up. So for this time frame, this asset has been bullish. We have a bullish candlestick. The opposite, it's when you have the close under the open. So it opens, it goes a little high, then it goes down, makes a low, and then it closes down. And we are going to see this on the charts. Next, I want to show you a different type of element to show price. So those are the bars. So those are called OHLC bars, means open, high, low and close bars. And you can see how easily you can add a line here, and turn them into candlesticks. And those lines, they show you can see much easier. The price opens here, low, you have a high, and then it closes. So bullish bar, you'll have the open on the left and the close on the right above. And the bearish bar, you'll have the open on the left up and the close on the right down. Usually you'll see those bars with colors. So there will be a green one, that's a bullish, and a red one, that is bearish. This makes the chart, so I'm going to show you those things on the charts. And on the charts you can also add price indicators or oscillators, which is the oscillator, it's a type of indicator. We are going to see how this looks a little different. And those are used to assist in price reading and to help you to build like a trading system or a trading strategy, because indicators, they can help you establish rules when to enter a trade, when to exit a trade, and so on. The moving average, you are going to see it's probably the most used indicator in the world, and very simple, it's just a line that follows the price. Then there are price oscillator that we are going to use one of them in this strategy. And if you check online, you will see that there are over 10,000 indicators for trading in this world. There are a lot of people that make indicators and sell them. And you are going to see in this course that I like it simple, because simple is better and you don't need to buy any indicators. All the indicators that I use are free. And if you add too many indicators, it's not going to work, so simple is better all the time. Indicators are mathematical formulas overlaid with graphics on the charts to assist you with the price readings. Oscillators, the same, are mathematical formulas derived from the price that are represented with graphics under the chart to assist with price reading. And now let's go on the charts so I can show you those elements. Here I'm on the TradingView platform. This is the TradingView app that you can install on your PC on Windows. You'll see in the video about TradingView how you can generally use this platform. So I'm showing you a few things that you'd need in this strategy. And we have an asset here, which is the Bitcoin US dollar. Here we are on the daily time frame, 1 day. And this means if I zoom in, and I'm going to show you later how to do that, you see those are the candlesticks. And each of these candlesticks are 1 day of trading. You can see the date here below. So here is 30 April, May, 2nd of May, 3rd, 4th, 5th, 6th, 7th, 8, 9, 10, 11, 12, 13, 14. So Bitcoin is non-stop. And in here, if I zoom in, you see with green I have here a bullish candlestick that opens here at this corner and closes here at this other corner. And you have a wick here, this small line here, which is the inferior wick, and another one here, which is a little smaller. So this means that the price opened here, it went down a little, then it went up for the day, and it made a high. And if I put this cursor on this candle, you can see that here I have open, high, low, close for the candle. So if I leave it here, now you can read the numbers. So Bitcoin in this day opened at 53,585. It went down at L, the low 53,087. It made a high at 58,008. And for the day it closed at 57,775. So this is what Bitcoin did in this day. And we have here other time frames. If you go on the weekly time frame, this weekly time frame is going to have 7 of those candles. Okay, so if you go on the monthly, this is the monthly time frame. You see it's pretty short. So it all starts in 2011, and here we are now. This is what Bitcoin done since then. Bang, 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 and down. And if I choose one of those candles, let me add a square from here to incorporate this candle. So we can go, if I go on the weekly, time frame, you can see that in this square there are 1, 2, 3, 4, 5, 6. So this is the month that starts in the 1st of March. This is 1st of April. So March, April, May, June, July. So each candlestick is 1 month of trading. So let's see from 1st of March, if we go on the weekly time frame, 1st of March is here, 8th of March, 15, 22, 29, and from here it's April. But those 1, 2, 3, 4, 5 candlesticks are in that bigger candlestick. If we go forward on the daily time frame, well, in that period we have even more candlesticks. And if I go on this day, 13th of March 2021, let me add a line here. If you go on the 4-hour time frame, so 13th of March, you see this is 12. So 13th of March, you have a few candlesticks. There are 4 hours each candlestick. Then if you go on a 1-hour candlestick, and we can see 13th of March starts here and it ends here. So this is the entire day. And you probably have here 24 1-hour candlesticks. If we go on the 30 minutes chart, where every candlestick is 30 minutes, you see you have even more candlesticks in this period of 1 day. 15 minutes, even more, and 5 minutes. You have a lot of 5 minutes candlesticks in this day. So this is how detailed you can go and see the price. But in this strategy, we are only going to work with the daily time frame. We don't care what's under the daily time frame. And the other time frames are too big to use because we want trades to work immediately. And apart from candlesticks, we also have here the line, which you probably seen before, price shown as a line. And we also have the bars that I was showing you before, that they look like candlesticks. Red and green bars, bullish and bearish bars. Of course, there are many other things in trading, a lot of elements from the past, from created by all type of people. So these platform offers all of them. We are only going to use those candlesticks and sometimes the bars to see better, nothing else. From here we can add indicators. So if I write moving average, it has here a moving average, which is this line. So this line will basically show you. So this moving average is going to help us know when to enter the price. And we are going to have other indicators that we will use. There are many type of indicators, but I'm only going to show you the indicators that we use in this strategy. I'm not going to cover other indicators. So don't worry, this is how you read price. You just need the daily time frame. Price is here. The dates are here. The charts are here. This is everything that we need for this strategy. We are not going to go in other details and too many information because it's too much. If you want something else, if you see something else, you can study it in your time. But I don't recommend you for now. I recommend you just to stay on what I'm teaching in this course and to do this until you reach mastery, and then you should start with something new. And you are going to see in a specific video in this course why you have to do that exactly. So see you in the next video.